Right, so in this lesson, what we're going to look at is a trade example. That's a really good example of essentially looking at how we can trade counter trend. So as you'll see in a minute, as we go through the higher time frames, we are essentially looking at a long position, which is heavily counter trend to the 4 hour, the daily, the weekly, etc. But I just want to show you, the safe way to do it, for lack of a better phrase, where we really let the lower time frames start to shift in our favor. We let the lower time frames really guide us of when the higher time frames are actually ready to pull back, so that we can play that higher time frame pullback. Okay, because obviously, as we're looking at in a second, the higher time frames are extremely bearish. If you're trying to look for longs, you are essentially trying to catch a falling knife against all of that higher time frame momentum. But we can be patient and we can wait for those lower time frames to build, for structure to shift in our favor, for supply to start failing, and for demand to start to take control in the lower time frames, in order to give us a lot more confirmation that we have the correct signal that the higher time frames may want to pull back. Okay, and then obviously, we don't swing for the fences, because we know at any point that higher time frame lower high could form and continue that overall bearish momentum. Okay, so as always, let's take our time building the higher time frame story before we even think about looking at entries. So first thing we always do, let's say we're starting on a weekly time frame. What am I going to do? I'm going to make sure that I know exactly what swing range we are playing within. Okay, literally the first thing I'm asking myself is, where is my current swing high and where is my current swing low? So I'm just going to paint the picture back a little bit, so we can see, right, we were bullish up here, making higher highs, higher lows, higher highs, and then we came down and we took this low over here, and then we kind of had this very trickling sort of corrective bearish trend, and then you can see up here price came up and took this high, so we switched bullish over here. I'm just going to change this to a weekly line, make it a little bit thicker. Cool. Okay, so we had a weekly breaker structure to the upside. Then we look back, where was the lowest point that took out this high? And it was this low down here. Okay, so if I zoom in, all right, this becomes our weekly low. So now at this point, the weekly chart is bearish. This is our swing high up here, and this is our swing low, but price pulls all the way back up and then takes out that swing high. So then we switch bullish again. Okay, now when we take out this high to form a higher high, where is our swing low? It's not this low here. It's not this low here, it's this low all the way down here. Okay, so with this specific example, the low stays in the same place, right? Because this is the lowest point after this high was formed. Okay, so after the higher high was formed, where is the lowest point? It's down here, right? That then went on to take out that high. So this is now the next swing range we're within. Obviously, we wait for price to have a significant pullback before we can know where the actual higher high is, right? And as we start to pull back, this is where we can mark out that is our swing range that we're currently playing within. Right, so now if I adjust this line up here, we can see we had another breaker structure to the upside with the bullish weekly trend continuing. So at this point, this becomes obviously our swing low, because this was the lowest point that took out the high. And then as soon as we start to have that significant pullback, right, when we get that weekly change of character up here, that is when we now know that this becomes the swing high. Okay, so at this point, we're trading between this high and this low here, which, as we can see, price pulled back. It came into this demand level. It tried to form that higher low, okay, because it tried to go on to break that higher high, because remember, we need to see a break of structure. We need to see the high up here, the swing high. Price needs to break and close above it for there to be a higher high. And the higher low is only confirmed once we have the higher high, okay? So at this point, when price comes down here and starts to move up, yes, we can anticipate that potentially this is the higher low, right? I know we've spoken about this example loads of times, but I really want to drive it home to you guys, okay? So at this point, we can take trade positions, on the lower time frames, anticipating that potentially we have caught that weekly high low, but it is never confirmed until we get a breaking closure above there to form that higher high. Okay, so then when price starts to come down on the lower time frames, at that point, especially with this momentum, you can start to anticipate that this low has not done its job because it has not made a higher high. So then, this low becomes weak and we can target this low, which is eventually what happened. It took out the low, but then of course we actually ended up taking out the swing low. So that strong low did end up getting taken out. Then we had that bearish trend change on the weekly chart when we got that closure below, okay? So now, where is the swing range we're currently within? Well, the high stays where it is, because this is the highest point that took out this low after it was formed, okay? So after this higher low formed to make a higher high, right? Where is the highest point then before when price came down to take that out? It's this point here, okay? So this is our swing high all the way up here. We don't really know where the swing low is going to be until we start to see that real significant pullback, okay? But obviously, you can just draw on with the current low we are within, and that is the current bearish weekly swing range. So after we have a weekly break of structure, what do we expect? We expect a weekly pullback. From a market structure standpoint, we can wait for a bullish change of character to potentially signal when that weekly pullback may be occurring. At that moment in time, since we've had that weekly break of structure, we have not had a bullish change of character because the internal price action has also stayed bearish, because all of these candles broke the prior candle's low. Then we had a small internal pullback, and then from then on, all of these candles broke the prior candle's low. So at this point in time in the market, for there to be a bullish weekly change of character, I would need to see this high go here, okay? Because that is, let's just make it dash so you can see the difference between swing structure and internal structure. So at this point, right, we would need to see this internal high get taken. So if the weekly chart pulled back now and took out that high, that would give us a weekly internal higher high. And that would be a good signal from a market structure standpoint that potentially the weekly is pulling back. Because remember, this is the weekly swing high all the way up here at this point. So price can pull all the way back. We could get that weekly change of character, giving us a really good signal from a market structure standpoint that the weekly is now ready to pull back, and it could pull back all the way up towards this high. And as long as price doesn't close above that high, right, it could even spike it and move back down. But as long as we don't get a weekly close above the high, then we're still bearish, and we could go on to form that lower low, confirming the overall lower high. Okay, so I know some of you, this is really, really basic and you'll be very used to this by this point, but I want to keep kind of driving these home until all of you guys, really, really understand it and it is as clear as possible. So after we get a weekly break of structure to the downside, we're anticipating that potentially we may get a weekly pullback. So as I just described, we can look for a weekly bullish change of character to signal the pullback may be starting. Okay, and that's what we use market structure for. Now, what is another tool that we can use to also anticipate where that weekly pullback may kick in? Well, of course, in a bearish market, if we're looking for a bullish pullback, if we're looking for price to move to the upside, we can start to look left for old areas of demand, right? Because old areas of demand in a bearish market, they provide potential reaction points, okay, for price to pull back. Okay, so old demand becomes potential reaction points for price to pull back to then generate liquidity beneath those lows for then price to target to continue to fuel that move to the downside, right? So as you can see here, we have this very, very large weekly demand range, okay, this large sell to buy range, right? That's the sell before the buy that led to that bullish break of structure. It's also technically a flip zone as well, right? If I draw on this wick or fractal supply, whatever you want to call it for the weekly chart, okay? So this is our weekly supply zone, right? Yes, you can draw it on that entire candle like that, right? Because that supply zone led to the break of the low here, but I just refined it a little bit to the wick because essentially what you're reading with that fractal refinement, of course, is a supply zone on the lower time frame, right? It's probably a lot clearer on the daily chart. So here we can see that price came up into that. It reacted from supply. Supply tried to do its job. It tried to make a lower low, but as we can clearly see, it didn't do its job. It failed to take out this low. And then this is where the demand stepped in, right, to push up against that supply, to absorb all of that supply and overpower it. So demand then takes control and it leads to a weekly break of structure, okay? So somewhere within this whole entire weekly range, this gray box, a lot of buying pressure stepped into the market to generate that move, okay? So now we can start to build that trade idea that yes, the weekly chart is very bearish, but potentially we could see some bullish pressure come in to facilitate a bit of a pullback from this area, okay? Now, obviously it's quite a large weekly zone, so you can drop down to the lower time frames to refine it a little bit more. And also, I want to make this point clear as well. If you are a trader who does not use range supply and demand like this, you can of course refine it, okay, to the pivot or to the single candle, or even to a fractal refinement, right, if you wanted to be really refined. But of course, the more refined you go, potentially the more you can miss those moves if we were to pull back from higher up here, okay? So I quite like to use range demand initially, and I refine it on the lower time frames, but obviously the further price moves in, moves down, you can of course keep refining it as you go, if that makes sense, okay? So that's the weekly chart, heavily bearish. We've had a break of structure. We expect a weekly pullback, but we would need to see a bullish change of character all the way up here on the weekly chart. However, we are tapping into a decent area of weekly range demand, so we could potentially see a little bit of a reaction, okay? Because even if the weekly chart doesn't get, on a full-on weekly pullback from here, even just a small little weekly bounce, right, with one bullish weekly candle, that's probably going to be a few hundred pips, right? So if we're entering on the lower time frames, with a 2, 3, 4, 5, even 10 pip stop, that is going to still give us decent risk to reward, right? Playing that counter trend move. Okay, so that's the weekly chart. So if we drop down to the daily chart, and you can just see how large this daily range is. So I'll go look at that in a minute to refine it, but let's look at structure first, because again, what's the first thing I always do on each time frame that I use? I try and locate where is the current swing range that I'm playing within, okay? So where is my swing high and where is my current swing low? Well, if we look, to use the highlighter pen, we can see we're clearly bearish, right? We had a lower low, lower high, lower low, lower high, lower low, lower high, one big run down, we had a lower low, then we pulled back to form a lower high, and then obviously we've just had that break of structure there. So just going to mark that out as price eventually broke and closed below that daily low there to the downside. Okay, so similarly to the weekly chart, we've had a bearish break of structure. We expect a daily pullback after that break of structure. So what can we use? Well, from a market structure standpoint, we need to see we don't need to, but a bullish change of character on the daily chart can help signify that the daily chart is pulling back. Now, where is the nearest daily internal high, right, that we would need to see be wicked or broken at least, right, for price to have that bullish change of character? It's not this candle here, okay, because you can be forgiven if you thought that this was an internal high, right? It looks like we came down, we pulled back, and then we came down, but actually you need to look at all the candles, right? All of these candles broke the prior candle's low, okay? You see how it's a bullish candle, yes, but the color of the candle is irrelevant. This candle here still was part of the down move, right? Because it broke the prior candle's low. So for me, that does not count as an internal high. The nearest internal high is actually this movement here, okay? Because we had the down movement, then we pulled back because we failed to break the prior candle's low, and then this is all part of the down move, okay? So for there to be a bullish daily change of character, that would be the high that I would need to see go up here, okay? So let's just make this a dashed line so you can separate that, okay? So this is the swing range I'm in. This is the high that I would need to see price break and close up above for there to be a daily bullish trend change, and this would just be the current internal high. So that would be the level that would need to be wicked or broken for there to be a bullish daily change of character. So obviously that's a very far away level. By the time the daily probably pulls all the way back up into here, into this prior range up here, it's probably likely that the daily lower high is going to form, right? And we're going to continue to get that daily lower high movement there, okay? Now, what else can we do to potentially anticipate that the daily may pull back? Of course, we are in that weekly range demand, but it's quite a large level. So let's go and investigate, to see if we can refine this a little bit more. And I'm going to delete the weekly box just because it's pretty large, right? So if we look at all of the daily candles within here, it's quite efficient price action. You can see it's pretty corrective, okay? There's nothing that massively stands out to me as very clear demand. Probably the cleanest zone I could see would be this daily box here, okay? So why am I picking this zone and kind of why does it stand out to me as a potential daily point of interest that we can look at? Well, a few reasons. One, obviously, like I was just saying, right, it's in the weekly demand level, but if we investigate a little bit further, right, we just drag this out the way for a second, what can we see? Well, we had this daily level here, okay? We drag it across. Again, we can probably refine it a little bit more. Let's see, no, it doesn't quite touch it, but essentially you can see that large buy to sell. All right, price obviously taps into it a few times. Sure, it's the daily zone, but we can see this is really where that kind of momentum came in. All right, we'll just move it out of the way to end up taking out that supply and actually leading to the break of structure. What also boosts its probability? Well, we have this structural low just above it, so that acts as potential inducement to the zone, okay? There is daily liquidity behind this level here, right? There's sell stops just in front of our zone, which obviously is another tick in the box for increasing the potential probability of our POI. And then another factor that I really like is it swept the liquidity behind these structural lows here, okay, when it was created. So it's a flip zone, right? Because, I'll just draw this on so I can concentrate. It's a flip zone because it took out this supply and obviously this weekly supply as well. It's a structural zone because it led to the break of this daily high and essentially also that weekly high there as well. Okay, so two ticks in the box, two ticks in, or whatever, you know what I'm trying to say. And then it also was a sweep zone, right? Because it took the liquidity behind this low here, because you can see what would have happened at that point in the market is price moved up, it pulled back, and then essentially made that higher high there, which then means liquidity in a lower time frame builds below these lows, and then prices come down, it swept and spiked out or grabbed that liquidity, and then that's led to fueling that move there to the upside, right? So we know we have now a structural zone, a flip zone, and a sweep zone, right? So all three in one, essentially, right? Not the most amazing zone in the world in terms of it's not super, clear. Price could potentially obviously come lower and reject to something in these wicks. And that's why, I'm essentially happy. This is what I mean by just taking that entire weekly range like here, because price does not have to hit your refined zones for me to want to be interested. If price comes into our weekly zone and then we start to see structure shifting to the upside on the lower time frames, right, but we haven't hit potentially our refined zone, I'm still happy to get involved in here, right, and buy. Because potentially we could still get a bit of a pullback, then come lower, right, then tap into our daily zone, right, and then again, if we start to see structure shift on lower time frames, right, then we can start buying again, okay? So obviously the more refined of a demand zone that price hits, then that obviously increases the probability of us actually timing that pullback kicking in, okay? So let's drag this daily zone across. Okay, so we've looked at the weekly and the daily chart. We can see they're both heavily bearish. They're nowhere near making a bullish change of character yet. However, we are currently sitting in a weekly range demand, and we are approaching a refined daily demand level, okay? So let's drop down to the 4-hour chart. This obviously being one of my main timeframes for focusing both on structure and of course POIs. So looking at the 4-hour chart, just going to hide the daily line from here just to keep it nice and clear. So hours and minutes, there we go. Cool. So if we look at structure, what do we have? We had lower lows, pull back to form a lower high, lower low, lower high. Yes, we just about closed below that low. Then we had a bullish trend change on a 4-hour chart. Higher high, higher low, higher high, pulled all the way back. We didn't take out the low, so the bullish trend continued. Then we took out that high to make a higher high, and then we switched bearish because we took out this low here, and then we pulled back to form a lower high, lower low, lower high, and then this for me is all part of the down move, okay? Now, why do I say that? Well, some of you may mark this out as swing structure here, right? This pullback here, but if I measure it, let's see how big that is. It's about 30 pips or so, okay? Now, for me, personally, on Euro-Dollar, on the 4-hour chart, I generally like to see at least a 40 pip pullback, as you guys will know, right? So I try and keep it as mechanical as possible. And because that's less than 40 pips for me, especially when you kind of look at, one thing you can use as well, rather than just a pip count, is to look at the recent price action and kind of see, how does it look relative to that? And you can see the size of the pullbacks here, right? This is just a small pause in price action compared to these nice swings in price, right? This is a bit more of a convincing swing, whereas this is just an impulse down, a quick sort of shallow pause correction, and then we have another impulse down, okay? So at this current time, just to keep it nice and clear, this was our last 4-hour bearish break of structure to the downside, okay? And for me, my 4-hour swing high would then be the highest point that took out this low after it formed. So after it formed, where's the highest point? It's this point here, okay? So that is my 4-hour swing high, and then because this is all part of the down move, where is my swing low? Well, obviously it's the lowest point at the moment, but essentially I won't mark it out until what? Until I see essentially, a more than a 40 pip pullback. If that was to happen here, then I can start to go, okay, well, that's my swing low, draw my line across, then I know I'm trading within this high and this low here, and I'm just waiting to see, if we're going to continue that overall bearish trend, right? But just like I said on the weekly and the daily chart, what have we had? We've had a 4-hour break of structure. So what do we expect after a break of structure? We expect a pullback on that time frame. How can we anticipate when that pullback may be occurring from a market structure standpoint? Well, we look for a bullish change of character, okay? So we've had this down move. Now, technically there are, some changes of character in here because let's see, we had a down move, we pulled back. Okay, so that's not, we've pulled back there. This is where it gets a bit messy because see this candle, it takes the low and it takes the high. So technically that is a bullish change of character in here, but you can see it's just very, very messy, okay? So you kind of have to read between the lines that, nothing's really happened. We haven't really gone anywhere and then we've dumped, okay? So at this point, if I needed to see a bullish change of character, what high do I need to see go? Well, the most recent internal high, it's not this one. You can pick that one if you want. It is a bit more prominent. But for me, I'm very, very aggressive with my change of character line, and I will use the most, or I should say the nearest high, okay, the most recent high, and that for me would be this inside bar. Because what's happened is after this high formed here, price has moved down, and then it's pulled back up, right, with this inside bar, because this inside bar, this white candle, you see how it fails to break this candle's low, right? So that means there was essentially an internal pullback there, right? So we have a down move, we have an up move, and then we have the down move, okay? So when I look back, this is my most recent internal high, okay? Now you can take this one above. That's absolutely fine. Just be consistent if you do that. But I'm happy to be very, very aggressive with my change of character because I just want to see that first signal that potentially structure is shifting. So I am aware that it is aggressive, okay? Now, I realize for some of you, this is very, very pedantic and over the top, really going over this, but it's just really important to drive these points home for some of you guys who are a bit newer, just to really make sure you understand all of this, the subtle nuances. Okay, it is simple, but yeah, when you're first doing it, it's good to try and fully understand it. Okay, so super quick recap. Weekly, daily, 4 hour, all very, very clearly bearish. We're sitting in weekly demand, but it's a massive, massive level, right? We are approaching that refined daily level, and essentially the 4 hour is extremely bearish. Now, there are short trades in here. There's loads of other trades, right, that I'm not going to go over, but the whole lesson, the key point I want you guys to take away from this specific video is understanding how we can trade counter trend to what is obviously a very impulsive and very strong hard time frame trend, okay? So at this point, if we're looking for counter trend moves, even if we're coming to a refined demand level, I would still really want to see, at least the M15 switching bullish. And if the M15 is going to switch bullish, what is that most likely going to be on the 4 hour chart? It's most likely going to be a bullish change of character on the 4 hour chart, okay? So that's what we can wait for. We can literally just sit on our hands, continue to look for shorts, and then wait for that bullish change of character. Okay, now what has happened since I played price forward is price has moved down. We've had a counter internal pullback, right? Because these candles have failed to break these candles low. Now we've taken the low. So now where is my change of character line? It's the nearest internal lower high, and it's this high here, okay? So my swing high is still all the way up here because we haven't had a 40 pip pullback yet, but this would be my change of character line that I would need to see go, okay? Right, we've continued bearish. We're now tapping into daily demand. Okay, tapping into daily demand. We've had a bit of an internal pullback there with that inside bar. Okay, now we've taken the low. So you see how we came into demand. This white candle, it's an inside bar. It failed to take out that low. Okay, so we've had a pullback and then we've taken that low there. So this becomes my new change of character line. Right, there we go. Okay, now, other thing you notice as well is look at the size of the wick on this candle. So if I just measure that, that is a 35 pip wick on 1 4 hour candle. Now, euro dollar is probably it is the most traded currency pair in the world, right? Forex market, it's about $7 or $8 trillion dollars worth of daily volume, okay? To move this currency pair that amount of pips, it takes a hell of a lot of volume. Now, the only thing I'll say is this candle did occur around the Asian session, so there is lower liquidity during that session, which means it's easier for price to move a further distance, right? Because there are less orders in the market at that time for price to have to battle with. But regardless, it's still a pretty big reaction, and that starts to give me a bit of a signal that potentially, demand is really stepping in. Now, when this happens, what you can also do is go and investigate. Look left and go, well, maybe did we reject off anything that looks significant? So we scroll all the way back on the 4 hour chart and we can start to investigate. All right, it's TradingView sometimes messes around with these zones. It can be a little bit glitchy, but essentially that's the daily zone we're looking at, right? We can look at, is there anything on the 4 hour chart that makes sense here that we reacted off, right? And we can see we have this extreme 4 hour sweep zone down here, okay? So we have this 4 hour demand zone nested within the daily zone, right? We're nested within that daily flip zone. Now you can go and investigate a little bit further and you can go, okay, this is at the bottom of this pullback here. Now, did this pullback react from anything on the 4 hour chart? Well, if we go and look across, what do we have? We have this supply zone up here, right? You can refine it to the wick if you want to, right? And you can see that that was 4 hour supply. Price came into it. It reacted, it tried to do its job, it tried to make a lower low, right? It tried to break this low, but it failed to do so. It failed to close below that low. And then this is where what? This is where loads of demand stepped in to cause that supply zone to fail, right? Once we get a closure above the reaction, this is the reaction from supply. It failed to take out the low, right? It failed to do its job. And then when demand steps in to cause price to then close above the reaction, what has happened? That is a supply to demand flip, okay? So anywhere in this entire sell to buy is essentially demand, but obviously that's a huge level. So we can refine it down to this extreme pivot demand. And that's a really decent 4 hour flip at the extreme of the reaction leg, and it swept liquidity. And of course, it went on to break daily and weekly structure. So that's a very, very solid refined level. So let's just drag this across. Okay, now that the point I'm trying to make here, right, especially with these levels as well, is I'm not going to go back over here and draw on every single 4 hour zone that could potentially be here in this entire leg, trying to anticipate and trying to catch where exactly the market's going to pull back, right? Yes, you can do that, but I find it's very unnecessary. So what I do instead, this is what I'm saying, right? When price is heavily bearish, keep looking for the shorts, right? They're the easy sells, but you also have to be aware that we could pull back at any point. But I wait for price action to show me when it wants to pull back. Wait for these large, big reactions. And even now, I'm not ready to jump in. I'm just using this as that first signal that, okay, that's a big sign, a big reaction that potentially we are gonna pull back. I'm just gonna move this out of the way, right? But I'm still gonna sit on my hands. I'm gonna wait for that 4-hour change of character. Ideally wait for the 15-minute to start to switch bullish. Wait for the lower time frames to start to have that sustained bullish order flow in order to increase the probability, that we are gonna get that pullback. Because this could keep going and going and going, and you're gonna get burnt trying to catch the bottom, right? So let's play price forward a little bit more and let's see what happens. Okay, now we have finally had our first kind of sign, that bullish structure, right? That structure may be shifting because we've had that bullish change of character to the upside. Now, most likely, what will that bullish change of character be in the lower time frames? Not always, but it's most likely a break of structure, right? On the 15-minute chart. So let's go and investigate the 15-minute chart. Let me just tidy the line up a little bit. And what we can clearly see is that 4-hour change of character is, yes, in fact, a daily a M15 break of structure. So I'm just going to draw on the M15 line instead. Boom, there we go. So you can see here, right? We had a lower low, lower high, lower low, lower high, lower low. Now, just to quickly point out, some of you may be going, why didn't I call that a lower low, lower high, lower low, lower high, lower low in here? And it's because if you measure these, right? For me on the EU, on the M15, I like to see at least a 15 pip pullback generally. And you can measure that, right? That's about 15 pips. So actually, yeah, that would probably be a swing pullback, just about, which you can mark that one. And then let's see here. So that is 15 pips, but actually it never broke the low. So this is the high, okay? So this is how I'd mark my swing structure. It would be a lower low, lower high, lower low. Then if this is 15 pips, that is a low, lower high, lower low. But then we failed to break the low, right? So this is all part of the pullback. And then we go, right? All of these candles break the prior candles low. So that is our swing high. Price then comes back up. You can see the size of the reaction here, right? And then we eventually get that bullish break of structure. So at this point, we're heavily, heavily bearish. We've tapped into weekly range demand, a refined daily level within that, and obviously a refined 4-hour level within that. We have waited for a 4-hour bullish change of character, which is a 15-minute break of structure. So now the 15-minute is confirmed bullish for me. Because remember, for a trend change, I keep it very, very simple. All I need to see is a swing higher high form, right? For a bullish trend change. We've taken out the lower high, we've closed above, and we have a higher high. So that for me is now confirming that the M15 is bullish. However, it's only one break of structure. What can happen a lot of the times, especially when a trend is very, very strong, is you can get one break of structure like this. The M15 can technically be bullish, but it can just be a liquidity grab, right? It can tap into an old area of supply or potentially, something on the 4-hour, for instance, and then it can just continue lower. That's why one bullish break of structure on just the M15, it's not necessarily the strongest signal that suddenly, the weekly is going to pull back, right? Because you're trading against all of that momentum. And if you actually go and study and investigate this price action around here, like in fact, I'll just go show you, right? There was a few times in that last week or two where we did in fact have a bullish break of structure on the M15. Okay, what do we have? We took out this low here. So this was our high. Right, if I draw the swing high across, you can see here we switched bullish. We had one bullish break of structure in the M15, and that for me it is bullish. And I was looking for a high low here to try and anticipate that 4-hour pullback, but in the end it didn't happen. Okay, the 4-hour took control. It was just this grab of liquidity. We tapped into this decisional supply zone. Okay, and then the 4-hour trend and daily trend continued melting. So that is why one break of structure is not a lot of confirmation, and this is why you'll hear, right, a lot of other people for there to be a confirmed trend change, they don't only want to see a higher high, they also want to see a higher low. So they need both a higher high and a higher low. But remember, we do not know where the higher low is until it forms a higher high. So what does that mean? That means for them to have a trend change, they need to see a double break of structure. They would also need to see this high go, because once that high goes, what would that give us, right? If price comes up here and closes above, now we have a confirmed high low, because we can look back and go, okay, that's the higher low. So you would have a higher high and a higher low. Okay, so for those people who need to see both a higher high and a higher low to confirm a trend change, what do they need? They need a double break of swing structure, right? And if you want to do it that way, that's absolutely fine, because it gives you a hell of a lot more confirmation. But just being, honest with you guys, or transparent, whatever the word is, right? I like to see just one break of structure. And for me, I keep it very simple. That is confirming right now for me, the M15 is bullish. For me, we are playing within this swing high here and this swing low here. But even though it's bullish, I am very, very aware that we have only had one break of structure in the M15, and I'm trying to essentially pick the bottom of that weekly, daily, and 4-hour momentum with just an M15 break of structure. So it's not a lot. So you are more and well within your rights, right, to start looking for, potentially old demand levels within here to potentially try and catch and anticipate what that M15 high low is going to form and try and get in early. But you do not have to, okay? And that's the kind of the purpose of this lesson, this video here, is showing you how patient we can be to just sit in your hands for a couple of days and really let price action develop before potentially you may even want to consider trying to buy this price action and trying to anticipate that the 4-hour chart and the daily chart are going to pull back, okay? So yes, you can look for longs, but let's just concentrate on the high probability moves, okay? Because very easily price could continue to dump from here and continue going down. So let's push forward a little bit and see what happens. Almost there. Okay, boom. So now what do we have? We have a confirmed double break of structure, which gives us what? We now have both a higher high, and we look back, where was the lowest point that took out this high after it was formed? This is the lowest point. Okay, so now we also have a higher low. So with that double break of structure, we have a hell of a lot more confirmation that potentially the M15 is pulling back, okay? So let's make sure price is pulling back a decent amount. Okay, so this is most likely going to be my next swing range. So as I'm coming into price action, right, obviously we've already marked out the current bearish ranges that we are within both the weekly, the daily, and the 4-hour. We've now had a double break of structure in the M15, and now I want to mark out what range am I currently within. So where was the lowest point that took out this high? It's this point here, okay? So this is the M15 swing range we are currently playing within. So what I'm going to do is I'm just going to play price forward to about 6 or 7 a.m. when I get to my desk in the morning, just to kind of show you my thought process. Okay, so like I just said, we've done all of that hard time frame analysis. We know what range we're within. And now what I want to do, the thought process I'm going through, is I want to catch the M15 high low, wherever that may form, right, to try and get that next higher high, right, to anticipate that 4-hour pullback. So at a minimum, I want to catch the M15 high low, and I want to target a higher high. So I'm going to take, for me personally, I'm going to take a lot of my profits off the table. I'm going to partial a heavy amount of my volume. If I catch the high low, I'm going to target this high here and take a hell of a lot of volume off because I'm trading so heavily counter trend. I accept that I might leave a lot of profit on the table because we could go on to have a very steep higher time frame pullback. But for me personally, I'm happy just to be pretty aggressive and take my profits off here. And then if we do go on to form a higher high, then what do? I just mark out the new range we're within. I wait for price to pull back. I try and buy the high low, and then I target a higher high in M15. And again, I take off my profits very heavily because at any point, right, we could start to break structures to the downside. That daily 4-hour lower high may be in place, right, and we can go. Okay, I'm getting a little bit ahead of myself here talking about management, but let's concentrate again on the entry. So we know we're within this bullish swing range. We're pulling back. So where are the POIs in which we can look to get long? Quick sense check you can do is draw on your premium discount tool, okay, from the swing low to the swing high. We know this is with the equilibrium. So ideally, especially when we're trading so heavily hard time frame counter trend, ideally we want to be looking for POIs below this line, okay? So first one that stands out to me is this demand level here, and then we've got one down here, okay? So let's draw on this first one here, and we have this nice clean M15 level. So how can we validate this a little bit more? Let's look for some confluence. Well, obviously it's kind of part of this pullback that led to the break of structure. So it is a structural zone. Is it a flip zone? Well, this is the pullback, okay? Look at the pullback essentially to see what it reacted to. So that's the reaction, and then this is the extreme of that reaction leg, okay? This being the reaction leg, this is the extreme of it that then went on to break the high. So what did this react to? Well, let's look left. It reacted to this supply zone here, okay? So we have this supply zone here. It's a decent level as well, right? This is supply because it led to the break of that low. So that's a decent supply level. Price comes in, it reacts from it. It tries to do its job. It tries to make a lower low. It fails to do so. And somewhere within this whole sell to buy is where the demand stepped in to cause this supply to fail, right? So the moment we close above the reaction, so this is the reaction, the moment we close above it here, what has happened? This supply zone has failed and demand has taken control. Okay, so it's a supply to demand flip. And anywhere essentially within this whole sell to buy is where that demand stepped in, but obviously we can refine it a little bit more down to this M15 extreme, okay? So it's a structural zone, it led to the break of structure. It's a flip zone because it caused the supply zone to fail. What also has it done? You can see it grabbed the liquidity when it created the zone below this swing low here, okay? So there's obviously a bit of a bullish move here. Intraday on the lower time frames, there would have been liquidity building behind that intraday low there. Pricing came down, flushed out all of those orders, grabbed the liquidity to then fuel that move to the upside, okay? So we have a structure zone, a flip zone, and a sweep zone, right? I'm just gonna delete this premium discount just to keep charts nice and clear. Now, what also do we have? Well, you can see we have these structural lows, right? This low just above it, giving us some inducement, but you can see we're starting to build almost that double bottom, right? Sitting above it as well, just generating more liquidity, because anyone who's already long, right, where the stop's most likely going to be, there's going to be a lot of sell stops below that low. Okay, so tons of liquidity there, and also anyone trying to sell the breakout, right? So that's a decent level. And then the next level I'd be looking at is this one below down here, nearer to the extreme. Okay, another decent level. Also very similarly, you can see it's a bit more messy, but you can essentially see it was a flip zone, because if you look, right, this is how I do it, right? This is the zone that I'm looking at. It's essentially part of this leg pretty much. So what did this leg react to? Look left, okay, there's a supply zone there. Essentially that does qualify as a flip zone. It is a little bit more messier, but you can see that, right? That's the reaction. And then we get that movement to the upside. Also have inducement above it. It's a decent zone. And, you know, potentially in the back of my mind as well, I would be keeping a very, very loose eye on this extreme zone as well, because there could be something in that wick. So what I do is I set my alert, right, on this POI, and I wait for price to come into it. And then I wait for my lower time frame execution model. So let's jump down, or yeah, let's go down to the M1. Hopefully it will load for me. There we go. Okay, so obviously this blue box, first blue box being my POI. So I'm going to play price forward until we come down into the zone and see if we get any reaction. Okay, so tapped into the zone, my alert's gone off. So quickly have a look. We can see, right, we've swept those M15 lows coming into our POI. We also have kind of these nearer M1 lows as well, right? So almost another double bottom here, which is decent. So that's a big liquidation coming into our higher time frame mitigation. So I've seen pretty much everything I need to see from that point. So now what I'm waiting for is just a little bit more confirmation to tell me that the zone is going to hold. And to obviously help me with refinement so I can get a tighter stop loss to boost my risk reward, because obviously I want to maximize the ROI on the amount of time I've spent, you know, analyzing and being patient. So that's why I want to get, you know, as tight as a top, as tight as a stop as possible was the words I was looking for there, right? So at this point we've come in. What's the first thing you guys know I need to see? I need to see a bullish, if I'm looking to get long, right? I need to see a bullish change of character on the time frame that I'm looking to enter on. So where is that bullish change of character line going to be? It's going to be the nearest internal high, okay? So some of you may be looking at this high all the way up here. That for me is more of an M1 swing high, okay? So that would be an M1 break of structure. That's cool, but remember, I want to be very, very aggressive with my M1 change of character, because I'm just looking for that first little indication that structure is shifting in my favor, and we get that first internal higher high. So for me, that level is this high here, okay? Because you can see price comes down, little pullback, price comes down, little pullback, and then all of these candles break the prior candle's low. So at this point, this is the most recent internal lower high that I want to see go. So draw my level across from there. All right, that's my chalk line. So not going to do anything unless that high goes. I just need to see price wicket, okay? Okay, boom, nice, close above that. So now, right, liquidation, hard time frame mitigation, change of character. So now I've seen everything I need to see. Now it's just a case of, okay, where do I enter? Right, everything's on my side. Where do I get in? Where is price most likely going to pull back to mitigate? So there's kind of two levels you can look at. One is the extreme, right? This is always going to be, you know, generally highest probability because you're entering at essentially the invalidation point. So what do I mean by that? Well, what I mean is that if you enter here, right, let's just say you put your stop, 2-pip stop, all right? What I mean by invalidation point is that if price was to come down, tag you in, but then stop you out, you've gone in at like pretty much the last point that price is going to hold if this trade is going to, you know, if this trade idea is going to be correct, because if we break this, we're probably coming lower. Okay, whereas if you enter somewhere higher in the leg, you know, price could react, it could tag you in, stop you out, and then it could come here and go. So this is why entering on the extreme is always highest probability if price comes that low, because you're going to know if you're wrong straight away and you only have to take one hit. Whereas you enter high up in the leg, potentially you may take both right, but you could end up being wrong both times and then you've taken a -2R loss. So maybe you're someone who wants to keep your strike rate as high as possible, then yes, I would recommend you always enter on the extreme of the move, or you have your stop below the low, because that is always going to give you your highest strike rate. But we have to accept is you may miss a lot of moves that do come back and react from something, what I call a decisional, right? Something higher in the leg, because price a lot of times will come in here and go, but you just have to accept that. And that's the toss up between how high of a strike rate you want and kind of just, you know, finding that balance, right? So at this point, my question is, okay, I know I prefer to enter on an extreme, but we could react off the decisional and go, because what do we have? We have a sweep zone there, right? We have this supply level here. which we can see price reacted from. You could take that whole range because it is a little bit small, right? Sometimes I prefer to do that as well, especially when, if you measure these candles, right, that's not even half a pip. And this tends to happen because you can see this is kind of just before 7 a.m. London time. This is kind of pretty much kind of the tail end of the Asian session. And although I'm zoomed in and they look like very big candles, this is a tiny, tiny range. You're talking like a few pips here. It's very, very low volume, right? So when price comes in here, yes, that is a valid flip zone, and that is a valid entry. It's a valid flip, right? Mark where the point of the reaction is to the base of the reaction. Price breaks and closes up above the reaction. That shows me that supply failed to do its job, right? Because we've come in, we've reacted, we tried to make a lower low, we failed to do so, and boom, that's where some demand stepped in and led to that change of character. So yes, you can enter here. Now, the reason why I didn't enter in here is mainly because one of the reasons is because the volume was so low. It was kind of the tail end of Asia. And this, for me, that reaction was barely half a pip, right? That didn't really fill me with much confidence that there was much of a, that battle between supply and demand there. It's not really going to take much for price to push up through that. And also, what's really key here is the reaction didn't sweep any liquidity, okay? So you can see price came in, it pulls back, and then this is all part of the up move. So we never take out a low, right? We never sweep some liquidity. So what you'd see often is price would react, it'll move up a little bit, then it comes down, it sweeps this low here, right? It takes the liquidity that would have formed below that low, and then we go, that here then becomes a really decent flip zone because it's a sweep zone within the flip, right? The flip essentially grabs liquidity. So if I try and make that clearer, price would come in to supply, it would react, it would make a kind of try to make a bit of an up move there, then it would come down, it would sweep the liquidity below that low, then we would have the confirmed flip, and then this would be the area, right, in which I would want to enter here because that flip grabbed liquidity and it's a sweep zone. When that happens, that is when you can take flip zones with a lot more conviction and a lot more high probability that we are going to react from here and we're not going to come down to the extreme. Now, in my plan, I do not have that as a strict criteria. Flip zones do not have to sweep liquidity for me, but I know a lot of you do have that, and I do recommend it because it really does help. I like to use personally a little bit of discretion in these scenarios. Because I've seen plenty of times where the flip zone and the decisional will play out even though it doesn't sweep, okay? But that's just something that will come with time and experience. So for when you're starting new and when you want to keep things very mechanical and you want to keep the strike rate as high as possible, I probably would recommend that you have that rule in your plan when you're starting out, and you can obviously change it later. So that rule would be that you will only take the decisional flip zone up here if it sweeps liquidity, okay? In this case, it didn't, so then you would look to take the extreme. I look to take the extreme in this simple case because yes, one, it didn't sweep liquidity, but two, you can see here, right, how big a 2-pip stop is, just to show you how low the volume is. That for me wasn't really a significant flip. It was barely a reaction, barely a movement, and the extreme looked a hell of a lot clearer to me. And yeah, it was barely even 7 a.m. at that point. So yeah, this is essentially why I look to take the extreme there. So you can see how now we've built the idea. We set our entry order, we've been super patient, and then we get tagged into the trade. Now, you should not even be looking at taking a trade if you don't even know where you would be looking to target and where you'd be looking to exit. If you don't know your exit plan before you've even entered the trade, you're fighting an uphill battle because the moment you are in a trade, your emotions are going to be way, way higher. You're going to be completely attached to the position going in a certain direction, right? Going to a certain level, and you're not going to be thinking as clearly. So this is why you need to have a very clear management in your plan where you know exactly what you're going to do. You need to be removing risk the exact same way every single time. Okay, so are you going to be someone who is going to trail to break even, right, to remove your risk? If so, when are you going to do that? Are you going to do it the moment we take out that first high here? Then are you going to trail it? Or are you going to wait for an M15 high or so on and so forth? Or are you someone who's going to take partials? Okay, are you going to take partials when price hits a certain structural level? Or are you going to use the fixed R method, right, where you always take off, say, 25% at 4R or 5R, for example? Okay, just make sure you know what you're doing. I personally would recommend the partialing method with fixed R. So I would say when price gets to 4R, take 25% of your volume off, and that will cover you for break even, because then if price was to come back down, it could potentially do this and continue, and you're still in the trade. Yes, you do sacrifice some of the potential reward because you have less volume on your trade if it goes in your favor. But anyway, that's a lesson for another part of the course, right? The management module. I don't want to get too sidetracked here. This is more about focusing on really letting the higher time frame story build and being super patient before you look for that counter trend move, and we have a super clean trade, right? M15 mitigation, really nice M15 POI, right? It swept liquidity, it was a flip, it led to a break of structure. We have inducement in front of it, okay? So again, we have we sweep here, we took out this supply, we led to a break of structure, we had these big double bottoms forming in front of it, right? Beautiful inducement. We then got an M1 liquidation, nice V-shape in, V-shape out. That's another thing I forgot to mention, which was really important, okay, because it shows the aggression of the demand being filled. Big imbalance between supply and demand there. Change of character. There was a flip, but it was very, very weak. Not one that I like. It didn't take any liquidity. Beautiful extreme zone there, right? Nice big wicks. What I love to see. Real clean zone there. And then take partials at 4R, 5R, whatever you like to do, okay? And then where we're going to target. Well, remember what I was saying a little bit earlier is that when I'm trading heavily counter trend, the only thing that's bullish at the moment in terms of the timeframes that I use for structure, if these are going to load for me, is the M15. Remember, we're trading heavily against the 4-hour and the daily chart. Okay, finally got that to load. So yeah, we're currently, I'll tell you what, I'll fire up the risk reward tool on there so you can see exactly what's going on here. 15, there we go. Okay, so if we jump back to the 15, where's my target going to be? Like I said, I'm going to be targeting that higher high, right? And that gives me over 10R. 10R is an amazing trade by anyone's standards. I don't care who you are. You can make an insane living off 10R. So yeah, let's keep it simple, targeting that higher high. I'm going to bank the majority of my volume up there. I accept that I may be leaving a lot of profit potential on here in case we do end up having a real deep 4-hour daily and weekly pullback, but that's okay. I'm happy to just continue to play whatever range we are within, wait for price to pull back, catch it, target the next high, right? Know which range we're in again, wait for price to pull back, try and catch the M15 high low, target the high, because at any point, right, that 4-hour lower high can form and then we're ready to go down because there's been a series of mitigations coming along the way. All of that demand has then been mitigated. So what does that mean? It means there's tons of sell side liquidity building below those lows. So when that lower high then forms, when we mitigate a decent level of higher time frame supply up here, and price is ready to go, that means there is no, this is getting really messy, it looks like a Picasso drawing, but there's no demand left for price to stop price, okay, because it's all been mitigated. You see her here, this zone would have been demand, it's been mitigated. So if we move up and we pull back in to form another level of demand, we react, we come off, and again, we come in, we react, we come off, but then we come up into a higher time frame level of supply to form that lower high. When price is then coming down, there's no demand here left to stop price or to slow price down because it's all been mitigated. And that's all the liquidity building, right? All of the sell stops, that price then triggers, cascades, all of those orders, and then you see that aggressive move to the downside, okay? I'm getting a little bit ahead of myself there with management, but yeah, that's essentially what is going on there with liquidity, and that is why the market moves the way it does. It's why we see such corrective moves back, right? Mitigating all of those levels of demand, and then when we tap that overwhelming amount of higher time frame supply, right, that overpowers demand, when price comes down, it's a vacuum. There are no buy orders left in the market, or very little, right? It's all just those sell stops, right? And then price has that impulsive move to the downside as they all get cascaded and they all get slammed, okay? So that is what is going on there, and that's why we see markets impulse, correct, impulse, correct, impulse, okay? That's what's going on there. So we're in that trade, we're targeting that high, so let's play price forward a little bit. Now, if you are someone who wants to push this trade a little bit higher, right, where can we potentially use some higher time frame targets? To target, if this will load for me. Okay, there we go. Trading views messing me around a little bit, but okay, so remember the swing range we're within on the 4-hour chart, it's actually quite a big one, right? If I mark on the premium discount, we have this swing high here, all the way down to the swing low here. So a very logical thing to do would be, okay, if we've caught potentially the low to try and catch that pullback, where can we reasonably expect price to pull back into? Well, potentially it wants to pull back up into the premium prices, right? So that's a pretty decent target. But of course, what do we know? When price is very impulsive, euro dollar doesn't always pull back that deep, okay? So yes, it is logical to target up here, but you want to pay yourself on the way and not swing for the fences when you're trading heavily counter trend. Now, another thing you can do, especially when we have such a large swing range like this, is you can take the internal leg, okay? Because remember, this isn't a swing high, it's just an internal high, right? And you can measure this leg, and then you can potentially target the EQ or the premium prices of this internal leg. Now, what is the nearest supply POI that we have on the 4-hour chart? It would be this bullish buy to sell candle here, okay? That would be my nearest POI, and where potentially we could pull back to, right, and form that lower high, and then go on to take this week low. Why is it a week 4-hour low? Well, of course, it hasn't done its job. It hasn't taken out that high yet, okay? So that's a pretty decent target. Let's jump down to the 15-minute and see if we can refine that 4-hour zone a little bit more and see if there's anything in there. Well, look, I'm just going to delete the premium discount because I like to keep my charts as fresh, clean and as simple as possible. So yeah, this is our 4 hour zone. We can refine it a little bit more. It's quite a big candle, but you can see this huge M15 inside bar clearly showing that that's where some supply came into the market. So you can target that level, right, as well. You don't have to partial heavily, or you can just leave your remaining volume, right. It gives you around 23R to the edge to the distal of that M15 POI. So just going to play price forward a little bit now. Again, there's loads more trades in here, okay? You know, you can play these counter trend pullbacks and everything. You can look to scale in, but I just want to concentrate on, you know, the low hanging fruit here, just to show you, you know, really just being really patient here, okay? I will do a summary at the end just to go over it, but yeah, just kind of drawing out here what's happening, right? You can see, you just keep drawing the swing range we're in. Every time we get a break of structure, what's the new range we're in? We're within this range. Wait for price to pull back. Okay, it doesn't quite pull back down to the discount, but what does it do? It sweeps liquidity. That fuels the move to the next high. Okay, mark out the next swing range we're within. You know, a couple POIs, looking at this one here, or looking at the extreme, which was a sweep, also has inducement in front of it, right, with this structural low here. Price comes into it, taps it, and then we start to see that movement away, right? There's trades in there that you can look, or again, do not be afraid to enter on the M15, right? There's amazing risk reward here that you can take, even with counter trend trades. You're seeing sustained bullish order flow. You just have to decide, you know, is that RR worth it? Just over 5R to the 4 hour supply, potentially 8R to the distal, potentially could push it even further, right? That's down to you, but the trades are there, but you were patient, okay? You didn't try and jump in down here or even here. You've waited for that sustained bullish order flow to come in. You isolate or pick out those extreme POIs, high probability, right? They're sweep zones, they have inducement, etc., etc. And then you have some tidy positions there to take advantage of. And then eventually we come all the way up into our 4 hour supply zone with our refined M15 supply in it. Okay, so you know that peaks at around, let's see, you know, just shy of 30R there, right? And then obviously as we come into that 4 hour supply zone, we can start to anticipate what? We can start to anticipate that potentially the 4 hour pullback is over, right? That lower high may be forming and we're about to get that next swing run. Okay, targeting what? Targeting all of the liquidity that's built below those lows, okay? Because all of the demand has been filled, right, with all of these mitigations, and it's potential that price can then come down. But what can we do? We can't, well, you can just jump in straight away, or you can wait for an M15 change of character to potentially anticipate that. Okay, so let's have a look. See how price just about spiked that small high, so that means that we have an internal low here, right? Because this low took out that internal high there. So that would be our chalk line. Now we've taken that chalk, right? So that's a sign of weakness. Now this is super aggressive. There is a trade in here. I'm not going to go over it, but essentially on the M1 now, there was a nice clear sweep zone up here, right? And literally, I know someone in the community took this. I won't say any names, but an amazing trade. And then you can tap into there. But it was around kind of that time of the market, which I wouldn't really advise you enter, which is around 10 p.m. GMT, around the daily close, okay? And spreads widen pretty dramatically there, and you will most likely get spiked out. But just showing you, we come into that extreme supply, we're expecting that higher time frame lower high to form. We get that first sign of weakness on the M15 with structure changing, where we get that change of character, pull back into the extreme kind of sweep zone of that, and then we start to aggressively sell off if I just play that forward, okay? But yeah, there's your pro trend move. And like I said, right, once all of that demand has been absorbed with all of these deep mitigations pulling back into demand each time it's created, right? Because remember what happens, demand gets created to make that higher high, price pulls back in, fills those orders and goes off. Okay, again, pulls back, goes off, demand's all filled. Yes, there will be some demand levels in here. That's why we see some reactions here. But overall, the supply is overwhelming, right? That all that high time frame supply is going to definitely overpower demand at the point. And that's where we go on to kind of try and form new lows. So let's do a very quick recap of kind of what was going on here. Weekly chart, we were heavily bearish, but we came into this weekly level of demand where potentially we may even see just the tiniest of reactions from a weekly standpoint, but that can give us very lucrative intraday opportunities. Daily chart, obviously very bearish, but we found a refined zone within that daily range, right? It was a flip zone, a sweep zone, and it led to the break of structure. It had inducement, so really decent zone, okay? Then we jumped down to the 4 hour chart. And at this point, we're literally just sitting on our hands. Really, you know, we don't really want to even be thinking about a daily pullback until at minimum we see a bullish change of character on the 4 hour chart, which is what we then got. We also saw that huge wick reaction, which shows us a lot of demand stepping into the market. We then scrolled back to look left and we found a nice refined extreme sweep and flip zone, right, 4 hour zone within that daily zone. Okay, you don't have to do this, but it just gives you a little bit more confidence that we are, you know, reacting off something that makes sense and we're not just reacting off thin air. We then got that 4 hour change of character. What is that 4 hour change of character most likely going to be in the lower time frames? It's most likely going to be a bullish break of structure on the M15, and that's what this was here, right? That was the first time the M15 then switched bullish. We got a break in closure above the swing high to form that higher high. Now, at this point, you can start to look for longs within here, right? To try and anticipate this move here. And it's absolutely fine. I will do that as well, but it's just a hell of a lot more risky. So what can you do? You can wait for both a higher high and a higher low to form to really give you that confirmed, bullish momentum coming to the market. But to get a higher low, we need a double break of structure, which is this second break of structure here. Okay, so now you've waited a couple of days. You're letting bullish order flow start to kick in, right? You're seeing highs start to break. You're seeing lows start to get respected, right? Demand is now clearly starting to take control, right? These sell to buy wicks. You can see supply zones failing, right? Supply zones failing here. And then when you mark out the new range we're within, right? This is the swing low, this is the swing high. You draw on your premium and discount. You mark out the POIs that are ideally in the discount, right? Then you try and validate them even more. What do we look for? Are they a flip? Yes. Right, we came into supply, we reacted. That led to the break of structure as well, and supply failing. This is the extremity of that leg. It swept liquidity. It has inducement, so that's a decent level. I also would have been looking at this level as well. This is where I use the M1 to confirm the level to me. So drop down to the M1 to give us our entry model when it came into it. And then, like I said, I target the next M15 high because I'm heavily counter trend. And that's personally at the moment where I take a hell of a lot of my volume off. I'm aware I leave a lot of profit on the table, especially in times like this. But it works for me. It works for my personality. It's the most congruent way I like to trade. But I did leave some. This is a trade I've taken. You guys would have seen, some of you guys would have seen the breakdown already, right? And I took off the majority of my volume. I had a tiny bit of volume running up to here, and this was an intraday move, okay? So 7 a.m. GMT to 5 p.m. GMT, right? Pretty much after London's closed around 4 p.m. GMT, tail end of the New York session. You can bank, if you had to hold your full volume, fair play to you if you do that, hats off to you. That's 30R, right? That's insane trade intraday. But the real point I want to make here is it's all about being patient, okay? You don't have to jump in all of these little moves here or trying to catch, all of these moves in here. You can do it, right? But if you just be patient for a few days, you wait for, multiple breaks of structure to the upside, you outline these super clean POIs, you saw how clean that M1 entry was, and then you target the next higher time frame supply level, and, you can literally just wait for that change of character before you even exit, because we could have gone on higher. So maybe you just trail as soon as you see that M15 change of character. Okay, you get out for 26R. That is your month. That is your, so for some of you, that would even be your year. Right, making 26R in a year. I'm sure many of you, I know at the start of my career, I would have been happy with that, right? You just made that intraday. But it's all about being patient. You don't have to be a madman, taking 3 trades every single session. This is it. This is training heavily against the higher time frames, almost being patient, letting the stars align, and then intraday, look at that. You can make 25 to 30R, obviously depending on how you like to manage your positions. And obviously there are a hell of a lot more scalings and whatnot in here, but I just want to show you, this is the easy, low-hanging fruit that you want to be patient for. So what I would advise is go back on the charts, re-engineer this trade, build your case studies like that, do loads of annotations, take, each time frame, put it into one of your case studies, put it into your trade plan, and have setups in there that you look at before every single trading session. Before you even turn on your monitor, before you even look at the charts, before you even fire up MT4, MT5, C-Trader or whatever on your phone, however it is you like to trade, don't even be thinking about that. You want to be quickly looking at your plan, refreshing your subconscious, right? What are the key points you look for? And then visually flick through these trades, and it will just keep you super calm. It will stop you getting FOMO. It will stop you rushing into shitty positions. And also it will teach you patience, right? Just to hold on to this trade, potentially if you want to push this a little bit further, okay? So on and so forth, okay? So hopefully you guys took some value from that. I know it's a little bit over the top sometimes on kind of how long I spend really talking through structure, but I know for some of you, especially new to this style, it can really help you just to kind of go through things super slowly. So with that said, I'll leave that there and I will see you in the next one.